Hi there, traders. This is Brad Gilbert with the FX Market Insight for Thursday, the 11th of April. All right, as we move into the Asian session, now there's a few big things out yesterday or earlier today, depending on which way you look at it. Now, the euro, dollar little changed as Fed, ECB signal patience. Well, that's right. The Fed have come out and said basically they're on hold for 2019, as you'd expect with Trump sort of working in the background, trying to threaten tariffs on Europe and China and everything else. But you know what? The ECB, Draghi was a bit more specific, saying they are ready to act if growth, etc., keeps falling. So that, to me, tells me that we're going to be watching the data. If the data starts falling off, you've got to assume they're going to be doing more QE. Now, unfortunately for the rest of us, the EU have offered the UK an extension to October 31st. With the review, I think it is in June or July. So once again, that drags out Brexit. This is an absolute nightmare because it just never ends. And then last but not least, the US and China agreed to establish trade deal enforcement officers. Okay, they're getting closer to a deal here, which would be great to get some movement because that is constraining, the whole global growth story. If China can get on with things, then hopefully we get some movement across the major currency pairs. But that's where they are. That's what's happening on the major pairs themselves, or on the news, I should say. Now, you come across to the MyFX Trading Hub and you look at the general setup of where we are today. You know, this is starting to get a bit like Groundhog Day, right? So when you do look at the major opportunities, okay, we've got the majors still drifting sideways. Once again, a major nightmare. And then also you've got the core market drivers here, China and Brexit, geopolitical events, an absolute, just kerfuffle. You know, it's absolutely terrible because what it does is it creates a situation where we've got the major currency pairs just sort of sitting sideways. There's no general move from the central banks. Okay, so what we end up with is currencies that don't have any major momentum or drive or trend or anything. Okay, and it's not like they're just trading in tight ranges. There's little pops to the top side, downside. There's a lot of false breaks. There's a lot of this and that and the other. Now, one thing that does stick out to me at the moment is the Aussie. Well, you know what? It's the run of recent Aussie data, even though it's sort of been medium sort of tier numbers, has pushed the Aussie above daily resistance around 71, sort of 40, 45. On the hourlies, it's up around 71, sort of 65, 70 as well. Now, that goes against the overall outlook for the RBA, which is weak global growth, potential drop in rates, housing's going nuts. So there's a bit of a disconnection there. That's not an opportunity where you're going to have a really long-term trading opportunity either way. Now, the Aussie's either going to stall or it's going to or keep going or come back. So what do we need? We need some sort of driver to really get us into this. And fortunately for us, you know, a lot of the heavy lifting data from yesterday, the ECB meeting, the US CPI, the FOMC minutes, UK GDP are all out of the way. This leaves us open here with Chinese CPI data to really pick into. Now, the Aussie has got sort of short-term or technical direction to the top side. Fundamentally, it's a little bit grayer than just sort of bearish because we have had a little bit of stronger data. But at the moment, the RBA is still concerned about global growth. So where does that leave us? Well, if anything, I think it gives us a short-term potential trading opportunity on these numbers, on the Aussie specifically. The Kiwi has gone into a bit of a neutral sort of phase at this point, and that doesn't do a hell of a lot for us. Now, I've covered this in the 247 trade zone, the next best trade watch list. You can go through that. There's a triple top on Aussie yen, which could really come into play for us. Check that out. It may give you a few ideas on where the best trading opportunity is today. You'll also find that on the MyFX Trading Hub page. So that's where we are, guys. This is a real battle of patience. Okay. Now, I've spoken to a lot of my mates in the banks and a few guys who are just trading for themselves. It's a really, you know what, just turn the screens off and just wait for the opportunities to line up. As I said, if you are looking for something keen, the Chinese CPI, PPI data today is something that you can really potentially sink your teeth into. And check out that Aussie yen. Now, just on the just to finish up, I'll just give you a run through these charts. Let me just make that pen a little bit thicker. The Aussie, just as you can see, just drifting the top side. It's not not by any stretch a clean move. It's just been chopping through the levels. Kiwi, straight through the sort of resistance line sideways. Dollar yen has got a little bit of a downward bias, but if I widen that range out, you'd see it's still within current ranges. And there's euro just banging away sideways, as is sterling. And check out the crazy price action here on dollar CAD. It is a dog's breakfast at the moment. Oil 64 or not quite 64 and a half. That keeps rallying. It's going to put further upward inflation pressures on a lot of economies, but also it should lead to a lower dollar CAD as the CAD goes forward from here. And that's all I've got to work with at the moment, guys. It's as I said, it's a bit of a wait and see. You know, I thought those US CPI numbers would have really given the markets a shot in the arm, but it wasn't to be, especially mixed in with that ECB press conference as well. So to me, I'm going to be focused very closely on the CPI numbers. There's also US PPI out later in the day. You probably want to check that out, and you can hold positions through that opportunity. All right, guys, that's it from me. Just keep it tight. Wait for the penny to drop. Don't get forced into trading just because you're bored. All right, guys, all the best. We'll see you in the 247 trade zone. Cheerio.